Subscribe and get free vouchers.
Hello and welcome, I'm Suyash Maheshwari and you are watching Last Week here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. After making a record high at open, Indian markets succumbed to intense selling pressure, with Nifty falling over 300 points from its all-time high levels. The market kicked off the session on a very strong note as Nifty opened about 100 points higher amid a strong handover from the Wall Street. However, within an hour of opening, the index spared all gains and bears took over, dragging the markets lower throughout the remainder of the session. We witnessed some bit of a pullback in the afternoon session, but the bulls couldn't come back and return to action and could not take Nifty beyond 22,500, and ultimately we settled below it as well. At close, Nifty was down 0.75% at 22,475 mark, while the 30-share Sensex gave up 726 points to close below 74,000 for the very first time since April 26. The broader markets too fell victim to this sell-off. However, they still managed to fare better than the headliners. The mid-cap index, for instance, was down 0.35%. It closed below the 51,000 mark, and the small-cap index corrected by about 0.5% and closed below the 17,000 mark. I mean, if you look at the overall week, Nifty still managed to post some gains, but Nifty was up about 0.6% this week, this truncated week rather, I should say. But where we were at the beginning of the day, we were about 2% higher. In just a matter of session, Nifty pretty much spared all those weekly gains. Nifty Bank, that continued to outperform. I mean, despite closing below 49,000 levels, Nifty Bank, which remember was a laggard for the longest of time, still managed to outperform Nifty for the second or the third straight week in a row, and ended about 1.4% higher. The broader markets, they were a bit of a mixed bag. Pretty much the mid-cap index posted gains of about 0.6%, whereas the small-cap index on a weekly basis fell 0.3%. Now, despite today's sell-off, I think the bias still remains on the positive side, and let me tell you why. One, Nifty managed to close above the 20 DMA, plays at 22,453. The last time we closed below this level was back in April 19th, which, if you'd remember, was the time when the sentiment was at its weakest, and was also the day Nifty made its most recent record low of 21,777. And look at how the markets have moved. Since making that low of 21,777, we have rallied by about 1,000 points. So after a 4.6% sort of a rally, I mean, 0.75% isn't something major to worry about. So I think going forward, one needs to look at the 20 DMA again, which is placed at 22,453 as a first sign of trend reversal. And as long as we continue to hold above this mark, the bias should remain on the positive side, and buy on dips should still be the preferred strategy. Second, global cues are much more supportive now. I mean, the 10-year, look at the 10-year, it's back below 4.6% and it's moving lower. Currently, the 10-year is placed at around 4.57% mark. And the dollar index has cooled off as well. We were at about 106 levels just a couple of sessions ago. We are back knocking at 105 now. Brent crude has seen a major correction. Again, we have slipped by about 5% this week alone, and Brent crude is trading below $84 a barrel mark. So if you look at the week in the entirety, the bond yields that have corrected by about 12-14 basis points. The dollar index has fallen from 106 to 105 now. Again, Brent crude, that has declined by $5. All in all, this is a very positive setup that we are currently in. So I feel that the bias still remains on the positive side, and again, this buy on dip strategy has really worked out in 2024, and I think that will once again work out this time around. Also, the US Federal Reserve pretty much quashed all talks of a rate hike in its latest policy decision. According to Fed Chair Mr. Jerome Powell, the first course of action now will be a rate cut. But for now, at least considering, the economic data that has come out, the inflation figures which are, beyond what the comfort zone of Fed, the stance is going to remain higher for longer. But that's enough for me. Let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Sir, thank you for giving us time here on News 9, and a great time to have you on a day like this, when the markets made a record high and pretty much nosedived by about 300 points to end in the red. I mean, what do you think led to today's sell-off, and what's your overall view on the market now?
Yeah, very good evening, and thank you for having me on the show. So, yeah, today was, I would say, one of those days wherein markets hit record highs and then corrected almost 300 points. Nifty corrected almost 300 points from the highs of the day. And then there was some bounce back towards the later part of the day. But that's more or less, Nifty is still down by less than a percentage. So I won't say much of a concern. But if you look at some of the heavyweights, like the top few heavyweights, HDFC Bank, Reliance, again, they are not looking very strong on the chart. So HDFC has its own share of, I would say, problems which we've seen in terms of the way HDFC has been trading. So that's one. And the other is Reliance, because these are the two heavyweights. Today, Reliance also led to a significant dragging in the index because it was down by almost 2.5%. And if you look at the charts of Reliance also on a short-term perspective, it really doesn't show much of an interest. So it tells me that high levels will be sold into Reliance, and Reliance isn't going anywhere in a hurry. So if you look at the broader sense of the market, still overall remains positive. If we compare the, I would say, Nifty versus Bank Nifty continues to, I would say, remain stronger as compared to Nifty on the intermediate term trend. That when I'm talking about the intermediate term trend, I'm referring to the weekly charts. And if you look at stocks like ICICI Bank today, still managed to end in the green. If you look at Axis Bank, it's still down by almost less than 1%. And if you look at State Bank of India, that's also managed to close marginally in the green. So what that tells me is that these are banking stocks have been still able to hold much, but other stocks, be it Reliance, which is down by more than 2%. We look at Kotak Mahindra Bank, again, that's because of the, I would say, regulatory concerns. It's down by almost 2%. And Infosys, TCS, they've just been marginal. Overall, look at the broader sense of the market. That's still advanced decline isn't that, I would say, concerning. But yes, India VIX is one which is really now moving up, and we've seen India VIX now gaining significantly. But still, I would say not much a cause of worry, because till the time we don't see India VIX trading consistently above the 16.5, 17, 18 levels, so that would indicate that still the markets are there. But if you look at India VIX over the last few trading sessions from 24th of April, so it's about almost 50%, not 50%, but almost 50%. India VIX is up over the last 5-6 trading sessions. We look at the global markets, we haven't seen much of a sell-off in the global markets today, but it's more of profit booking that's happened, and also Reliance, sell-off in Reliance. That's what been one of the major factors which have really led to this sort of market correcting from the highs. But when the market trade at record highs, you have to be prepared for anything. And if you look at the weekly charts of Nifty, that clearly tells me that there is more of consolidation happening there.
All right, Nifty could be heading for some bit of a consolidation. I mean, I completely agree with you on this point, sir. The kind of move we have seen lately, Nifty has rallied close to 4.5%. I mean, from its recent April low of 21,777 to the most recent record high of 22,794. And I mean, a 0.75% correction is not something to worry about as such. Also considering the global texture, the global handover has been rather positive, with bond yields, dollar index, and crude all falling, which again is a positive for Indian markets. So I think the overall sentiment should remain on the positive side. But on that note, let's take a short break. But sir, please stay with us. We have plenty more to discuss with you on the other side.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching Last Check here on News 9, and we are in the midst of the fourth quarter earnings season coming out with their results tomorrow, which is May 4th, Saturday. That is Kotak Mahindra Bank. I mean, India's fifth largest lender is expected to report a 3.4% drop in profit after tax to about 3,377 crore versus 3,495 crore in the year ago period. However, net interest income, which is a difference between interest earned and interest paid, is expected to rise by about 9.3% again on a year-on-year basis to 6,670 crore from 6,102 crore in the year ago period. Net interest margin, which is a key measure of profitability for financial institutions, may come under pressure both on a YOY basis as well as sequentially. Deposit growth is expected to be healthy at about 17% YOY and 4.5% QOQ. Loan growth is seen at 17% as well, again on a year-on-year basis, and 4.3% on a quarter-on-quarter basis. Slippages are expected to remain at around around the Q3 levels, while asset quality may improve or at least remain stable for the quarter under review. Numbers aside, the key things to track will of course be the management commentary and outlook, especially considering the recent restrictions imposed by the Reserve Bank on India. So how would that impact the bank's earnings going forward, and what steps it is taking to mitigate the concerns raised by RBI? Those, I think, will be keenly eyed in the management commentary. Now, remember, Kotak has been plagued by negative news lately. First, it was the curbs imposed by RBI on onboarding new customers online as well as issuing new credit cards. Then the bank's joint MD KVS Manian abruptly resigned. Now all this has rattled the stock. It is down about 11% in the last 5-6 sessions and even made a fresh 52-week low today. Amar, I'll come to you. What should one do with the stock now, sir? I remember the last time we spoke, you said that 1500 is a big support for Kotak Mahindra Bank. Is that still the view? By the way, we are still hovering above that 1500 mark. So what's your call on Kotak Mahindra now as things stand?
See, if you ask me, Kotak Mahindra, I've earlier also talked about that. This is one bank or one stock which any investor would have invested in for the last few years, wouldn't really have made any returns. I would say negative returns would have been there. And because the stock has been not, if you compare it with ICICI Bank has delivered superior returns. If you look at Axis Bank, they have delivered superior returns. If you look at SBI, they delivered superior returns to investors. But if you look at Kotak Mahindra Bank, it's really disappointed the investors in terms of returns. And this latest, I would say, guideline definitely doesn't make things better for the stock.
All right, and another stock we wanted to touch on was Bajaj Finance. Remember, Bajaj Finance was in the news today after RBI lifted digital lending restrictions on the NBFC nearly 6 months after it imposed them for violations of its guideline. Remember, RBI had on November 15th directed Bajaj Finance to halt loan issuance through its e-com and Insta EMI cards. The central bank had imposed these restrictions due to a lack of transparency and disclosure of conditions like fees, charges, recovery practices and key fact statement, which is a crucial requirement for digital loans. And the stock, if you look at it, opened about 7% higher this morning, but I think it fell collateral to the broader market correction and ended about 0.5% higher at around 6,900 sort of levels. I'll come to Amar in just a bit from now, but let's look at how Bajaj Finance has performed in the last few months. Pretty much in the last 5 days the stock was on the rise. It was clawing back of all those losses that it had made in the last 6 months. Most of it came because of the restrictions imposed by RBI, but after pretty much on the last 5 days it is up 0.5%, but again remember the stock has been in a downtrend. It has fallen by about 5% in the last month, and on a year on the 6-month basis it is down almost 8.5%. but this morning we opened significantly higher. The stock opened about 6% higher, went on to get to 7,400 level, and that level is key because that is where we were on November 15th, right before these curbs came into place on Bajaj Finance. So Bajaj Finance, I think, could be an interesting stock to track, considering that the prices after that initial knee-jerk reaction to RBI lifting the curbs, the stock did fell victim to this broader market correction and pared most of its losses to most of its gains rather to end about 0.5% higher. And I'll take this to Amar because he's back with us. Amar, what's your view on Bajaj Finance? I mean, a big strong opening of about 7% this morning, but pared most of its gain. Again, victim to this collateral, victim to this broader market correction, or is there more to it than we can make out?
I would say, Bajaj Finance definitely doesn't inspire much confidence at the current levels for going into buying or investing, because if you look at the stock on the long-term charts, on the monthly charts, or even on the intermediate-term trend, really tells me that the stock is somewhat capped. So on the higher side, if we look at the stock somewhere around 7,400, 7,500, that's a very strong. Today's high was around 7,400, and earlier or recently tops also were around 7,400 levels. So the stock isn't able to breach consistently above the 7,400, 7,500 level. So what that tells me is that there's a lot of selling pressure that comes into the stock. And also, if you look at the stock on the long-term charts, when I'm talking about the long-term, I'm primarily referring to the monthly charts. So the monthly charts really don't show much of a confidence. So from that perspective, I would say it's more or less consolidation there. On the downside, the stock has got good support coming around the 64, 6,500 level. So that's the range, 6,500 and 7,500. That's the range for the stock.
6,500 on the downside will be a key support for Bajaj Finance, and 7,500 on the upside is where the stock is expected to rise, but not inspiring much confidence as of now despite RBI lifting its curve. But Amar, before we let you go, whenever the markets, they are at a record high, the big question that comes to everyone's mind, that what's cheap in this market? Any sector that is currently trading at a discount in your opinion, sir?
I would say at the current juncture, that's a tough question, but you'll have to be stock specific, because sectors, if you look at the sectors, auto sector is definitely one good sector to be into, but most of the stocks have really rallied significantly. So I would be more, I would say, interested in looking at specific stocks rather than sectors at the moment.
All right, maybe it makes sense to be stock specific, also considering how the earnings season has panned out. I mean, the street has really rewarded good guidance. I mean, look at Tech Mahindra. The numbers were nothing to write home about, but the commentary, this turnout, the 3-year turnout plan laid out by Mohit Joshi, the new head of the company, that really catapulted stocks to it's many month high, and I think any sort of disappointment as far as commentary is concerned is really weighing on the stocks. We saw that in the case of Bajaj Finance. But on that note, we'll bid you goodbye, sir. Thank you for sharing your time and insights with us on News 9.
Thank you.
All right, it's a wrap on this edition of Last Week. We'll see you on Monday at 9:45 on First Take. Coming up next is Business Plus.
Golf as a game It is closest to the game that you call life.
You've got to use your mind. You cannot lose it.
The sharpest person is one